Hey guys, Darren here. Thanks for joining the Stock Market Options Weekly Update for the week of November 13th, 2023. There's always something going on in the market, and we're going to touch on it today. We're going to look at where we are in the S&P 500 last week as well as year to date. We're going to talk about the different sectors and what they did last week as well as year to date. We're going to talk about the economic calendar, the reports that came out last week and are coming out again this week. And we are going to talk about earnings and where we are year to date. All right, guys. I think it's important that we understand the ways that the rich are getting richer. And we use the same tools that they're using so that we can profit in any market. I promise we're going to dig into many detailed option trading tips and tricks. So if you haven't subscribed already, make sure you do that now. And please hit that like button so we can get this video out to as many people as possible. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone. And hey, disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning, I recommend you start small. All right, guys, we started the week in the SPX at 43.58 right here. Let's see, are we on the 5-day? Let's make sure we're on the 5-day here. Yep, okay. We started at 43.58 and we ended up at 44.15 over here. So we were up about 1% last week and 5.5% the week prior. We're up year to date. Let's look at the chart year to date. We are up around 13% year to date since we started at 38.24. All right, the forward PE right now is 18, so it's just above the 10-year average. Looking at the economic calendar for this week, not too much. Core CPI is coming out Tuesday, and we're expecting 4.1% year over year, same as previous. And we've got the initial jobless claims Thursday. Wasn't too much last week either with the economic calendar. Looking at the earnings and FactSet Earnings Insight, if we look at page 1, we can see earnings growth rate for the S&P 500 is 4.1%. And if that's the actual growth rate for the quarter, it will mark the first quarter of year-over-year earnings growth reported since Q3 2022. So things are looking a little bit better. And then if we go over here on the report, this is a report I like to look at. It comes out weekly. Page 13, for Q4, analysts are projecting earnings growth of 3.2%. and revenue growth of 3.3%. And then for 2024, the calendar year, 11.6 revenue growth and 5.5% for revenue growth. 11.6 for earnings growth, 5.5 for revenue growth. So things are looking good moving forward. And for next year, and then if we go to page 31, I like to look at the PEs. You can see right here, energy still below the 10-year average. So I think energy is a great buy right now. Real estate's down with interest rates up. I'm not sure I'm ready to really jump on the real estate bandwagon just yet. Communications is a good buy right now, and consumer staples. And if we look at the sectors last week, the 5-day, we had it again a little bit of an up week, so most of the sectors were up. Oil was down big, so again, I'm long oil, so I did buy a little bit of oil last week. And then utilities are down as well. Technology was up big last week, and if we look at year to date, technology is up huge, 44%, as well as communication services and consumer discretionary. I'm shorting XLY. I think that might be tough moving forward, and energy is down year to date, so I'm long energy. So let's jump into the actual trades on the Tasty Trade platform. So again, I'm long oil. I actually have a call spread here that I sold because IVR was high last week, and it kept moving down, but I'm still long oil. If we look at the curve and the analysis, I do need it to move up quite a bit moving forward. We're at 77.39 and IVR is at 51, and I've still got a debit spread on. This one's dead anyway, so I'm just letting it close out 3 days next week. But AMD, we're right in the middle of the range on AMD. IVR is still good at 28, and let's see, I wanted to touch on Apple as well, but I'll do that next. So if we look at the chart right here, we can look, I like to go to the 1 year, and then you can click on days right here. And oh, what a mess. I've got a lot of notes here, but you can see AMD, it actually had to move up. We were, let's look at something a little tighter. Let's go to the 1 month. And then you can see it was just down here at the 95 range, and now it's all the way up to 118. So we are actually right in the middle of our iron condor, a little bit to the upside at 118. But again, with that big move up, I'm comfortable where we are at. And if we look at how we've done, just I think in the last 60 days, yeah, we've made like $450. So AMD's been pretty good to us, and I like trading that, especially when the IVR is up there above 20. Boeing, oh, I was going to talk about Apple. I normally like to have an Apple trade on, but I wanted to show you the IVR is 3.5. So, and with the stock at 186, oh geez, let's look at the year to date and the day. Yeah, so it's moved up a little. You can see the trend. It is above the 200-day. The red line is the 200-day moving average. And we're right in the middle of this range between 180 and 190 right now. But IVR is too low. You can't really do anything in it. So if I were to try to sell December put credit spread, $5 wide, right at the money, I still can't collect a third. 166 would be a third the width of the strike. But because IVR is low, we cannot collect $166. So that's why I'm not trading it. I just wanted to touch on that. Otherwise, I do like to trade Apple, but IVR is too low right now. Boeing, 180, 170, put credit spread. It's doing pretty well for us. By the way, Amazon, I like to trade that as well. Same situation as Apple. IVR is too low. Boeing, 1 year chart. If we look at that, I like to, not year to date, but full 1 year. And you can see Boeing is down below the 200-day. Commercial airlines seem to be doing really well. And then obviously there's wars going on, so it's also a defense stock, and that's why I like it as well right now. Just in the last 230 days, or let me see, last 30 days, we made $273. So doing pretty good there. If we look at the curve mode, we needed above what, 178. We're at 196, so we're well in the profit zone. And what do we have left to make in there? $86. We'll probably just leave it. It seems to be doing really well. Bank of America, the banks are down. They have been. I'm still long, a couple of leaps, no real change. I lightened up one tranche. I closed out because it is going to be a while for the banks to come back. But I've got the deep in the money, or the 20 call, and then it sold a 29 call against it. So poor man's covered call. Chewy, 17.5 to 22 strangle, and Chewy is at $19.96. It was at like 21 last week, and IVR is very high. We must have some earnings. Let's look at positions over here. And if we look at Chewy, when does earnings? Yep, 12/6. So we have earnings before this date. That's why IVR is very high right now. But 17.5 to 22, we're right in the middle of that range. and I like Chewy. It's a good online stock that people that a lot of people have pets and order for them online. So I'm just gonna stay long, and I'm trading both sides as you can see right now. So DraftKings, another good one. I may do a video on this one. I've got two deep in the money calls, and I've been selling calls against them. So if I have an up day next week, I'll sell calls against this. I may do a video on this on the poor man's covered call, because we have done really well, and I think it's going to continue to do well uh, going forward. I mean, if we look at the last year in DraftKings, yeah, we made $1,500 just trading poor man's covered calls against the deep in the money calls that we have. And as it increases in price, we continue to make money as well, just like owning the stock outright. So let me know in the comments below if you want to see that poor man's covered call video. I'll put one together on DraftKings. Golding, small. This is a kind of a speculative play. Gold mining stock. I've got 500 shares. Google, 125, 115. Put spread, IVR, just like Amazon and Apple, is super low right now. So there's not much we can do there. I've just got it on and kind of watch it. I'll probably look to close that out next week. Humana is a new one that I just put on this last week. It's a expensive stock, 493, so definitely want to do a credit spread. And we sold a put, looking for it to go higher. This was actually one Jim Cramer recommended, and I thought about it, and being in insurance right now is a good it's good to have in our portfolio, I think. And in a high interest rate environment like this, they're going to do really well. They've got like $30 billion in cash. The other big one is UNH, United Health. But if you look at this chart and right around the 200-day, if we look at it's fairly valued. If we look at United Health, UNH, it's way up above its 200-day. And they're both solid companies, but I just think the better value is Humana right now. And again, with that cash, I think it's going to continue to do well. And yeah, we're already up $31 on this put spread. L3 Communication, or L3 Harris. We've got a 175. We've got two put credit spreads and have done well in L3. I think it's going to continue to do well. I think just we've only been trading it for a short while, 30 days, but you made $150 already. So I'm going to stay long. It's still below its 200-day, and again, there's wars going on. These guys have all the radios for the military, and good defense stock, and I think the defense stocks will do well. Lockheed Martin, same thing. A lot of products, military products. 30-day, I think we've made close to $100 and $90, and I think it's going to continue to do well. And yeah, it's below the 200-day, so I don't understand why, with what's going on in the world right now. Medical properties, we've talked about this one before. It's going to be a while. It even went down last week. Unbelievable. But, healthcare REIT, huge dividend. I think it's going to be okay in the long run, so I'm just hanging on. Palantir is a good growth stock that we've done pretty well on. I think in the last 6 months, we've made $440. So pretty well in Palantir. And we've got a poor man's covered call, a 10 that's out 432 days. Now, when I get to 1 year, 365, if I still want to have this poor man's covered call on, I'll close out that deep in the money call, and I'll move back out to close to 2 years, just because there's not much difference. It may cost 30 cents, $30 to do that, and then I'm good for another year if I want to stay long and pay half the amount of owning the stock outright. So that's kind of the strategy, and I'll cover that in the video I do on the poor man's covered call. But we've got a 19 call that we've sold against it. Now we're actually past this. I'll probably, on any down day next week, I'll probably just Well, wait, we've got $40. No, I guess I'll leave it on as protection right now, but I could close that out, move it out in the time, or up in value above the 19, but we're already kind of maxed out uh, on our profit right here. So that's why I would like to, on a down day, close that out, and then on an up day, roll it out again a little bit above and collect more premium. PR is a small oil company stock that has a possibility of getting acquired, so I've got that on there. SoFi has been getting killed. It's under $7 right now, and I think long term, SoFi is a great online fintech banking and loan financial stock. So I am definitely long. I've got 300 shares, and then I did on a down day buy another deep in the money call. So hasn't done well yet, but I am confident that it will. And SOXL is the semiconductor ETF, and it actually moved up to 20 last week. So I moved my put up above my call, but you can see the big move up, and we are just at the top end of our profit range. So I'm got to figure out what I want to do there. But I had a strangle, and then now it's kind of gone inverted because I've got my put above my call. So we'll watch it, and if it keeps going, I'll continue to roll up the puts, and then at some point I'll close out and recenter. But we'll follow that one. It's done pretty well for us so far. And then let's see, SPX. So with the move up in the market, obviously we did get a little bit hurt in SPX, but over the last 180 days, we've still made $1,650. So trading both sides of the market, I had moved mine out to 30 DTE right now. So I'm $15 wide too. So once I am $10 wide, and if it goes against me, I'll roll out one more time. And this time, instead of going one day to the 0 DTE, I'll go out 30 days and give myself more time. So we'll see. On a big down day, I will probably close this out if I can make some money on it and then start the process over with SPX. If it just keeps going up, then I'll take the $1,500 loss, and then most of my other positions should do well and more than make up for it. So that's kind of the strategy there. SPY, we've got actually pretty tight now on our iron condor because we've moved down, and this SPY's kind of whipsawed us, but I think we're still probably in the profit range. Yeah. No, we're just outside. So we are up here at 440 is the price. IV ranks a little bit low at 14.9, but we need to be down here. So I'm looking for a little bit of a pullback. We've had a couple of up weeks, so we very well could, and it could come back in the range. So I think I'm going to hang tight on SPY right now. SQQQ, another YouTuber actually recommended doing this on up days. It's the inverse. So it's the short QQQ. So when technology and QQQ does really well, this does really bad. When the Qs, which are up, technology is way up this year, 44%. We saw that in the sector spiders. Then this is going to be down. And with this down, if we look at the chart down here, you can see where I bought it. Actually, the dotted line, I just bought 100 shares at 17.55. So it's way down here at the bottom range. So when the market drops, this will move up, and then I can close out and sell it. So I'll just kind of use this as a hedge, just like we do with the SPX, against the rest of my longer portfolio. Teledoc, poor man's covered call, 15 deep in the money calls and 17.5 puts against it. Teledoc, just I think in the last 30 days we've done pretty well. Yeah, $276 that we've made, and Teledoc will do well as the market moves up. Visa, this is the credit card company, and they're huge and doing very well. When you talk about financial stocks, these guys and fintech, these guys have been around a long time, and they're super solid. There's also MasterCard, American Express, but these guys are doing well. It's up above the 200-day moving average, right at the trend line that you see. I've got drawn the long-term trend line. But with Visa, we've got, if you look again at that chart, you can see with the technicals, we're right in the middle, 245. We've got some support around the 240 range and then resistance around 280. So, you know, for the short term, it could trade within that range. But we're doing pretty well in Visa. Verizon, big dividend stock. So I own the shares outright, and then I sold calls against it, and it's actually been moving up. So my calls are in the money, my December call, but it's been doing well. It's got a big 8% dividend, so that's pretty huge. And then Wells Fargo, still long. It's going to take time for the banks. I've got a Leaps. We've got support at 40, and then resistance at about 42. We're right in the middle at 41. But I'm going to stay long. You know, I've got one tranche of Bank of America, one on Wells Fargo, just to kind of watch them. Over time, you know, with interest rates higher, banks should do well, so they'll come back and start moving up at some point. Consumer discretionary, I mentioned in the sectors, I'm against, you know, I'm betting short. I think people are going to start spending less. I don't think that the employment, the income is keeping up with how much people are spending. So at some point, the higher rates and low wages will make it tough for the middle class. So I expect that to go down. It's at 161 and 16 or 15 IVR. And then the last one, ExxonMobil, 103. I like, you know, oil was down big, so this is down. Yeah, but I think ExxonMobil, as oil moves higher, is going to do very well. And we're profitable down to 105, so we're not that far off. And Exxon's done pretty well for us. Any down move, I will actually probably buy more and get long. All right, guys, and then let's take a look. If we look over here on the left, you can sort by earnings, and we can look at what's coming out next week. We can go all earnings, and then right here, we click that, and it sorts it by date. So we can look on the 13th tomorrow. We've got, let's see who's reporting. We've got Home Depot on Tuesday before the bell. And then we've got Target on Wednesday before the open. TJ Maxx Wednesday as well. So we've got some retail on Wednesday. Advanced Auto Parts, I've played that before. Palo Alto Networks is expected to do very well. Cybersecurity, they're the leader. They're on the 15th after the bell. And then we've got Walmart. So again, some more retail next week. And then we've got Zoom ending up the week, it looks like, or on the 20th. So if you're playing any of those earnings trades or want to learn more about them, or you think there's a good trade, let me know. And that is the trades for the week. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Make sure to hit like and subscribe. I really appreciate it. Let me know in the comments below what you're trading, what you'd like to see going forward. And I appreciate you watching. Share the video with a friend, and see you in the next one.